What's up, guys? How's it going? It is October 15th, a Wednesday night, and I'm going to be bringing you guys what we call a little bit of market cycle sauce here. You guys are going to see me go through a little bit of a back test, but it's going to be a little bit of a more in depth breakdown when it comes to market overextensions, safe times to buy versus dangerous times to buy, times where you're likely to get a follow through, and times where you're likely to get a retracement. So, without further ado, this itself is probably going to be its own video cut up into, a much shorter duration that you can watch on the channel. But this is also going to be a full back test, maybe for the next couple hours here. So if you're watching this video in the future and you've already seen this part or this video or segment of the video, feel free to skip. I will have a timestamp here when it gets to the actual back testing part. But if you are watching this video just and within the first 30 minutes here, where I'm talking about market overextensions and retracements and best times to buy the market, then if you go to the other video, the longer version, you'll get a full back test afterwards as well. So both will be beneficial to you. I'm not going to tell you what to do. You do what's best for you. But if you're here right now, we're going to take this opportunity to just sit back and learn. Gonna have a nice chill back test and try and lead you guys through what I know about market overextensions and retracements. Okay, so I have Nvidia here opened up. Nvidia is a good one because everyone knows Nvidia's kind of been on a tear. Looks like ever since October or September of 2022, it's really only gone up. Even before that, this period here wasn't the longest retracement. Neither was this one here. So yeah, anyone with a baby boomers or a retirement plan or whatever the hell normal people invest in or lock their money up in, if they simply just put it in Nvidia, since the beginning of time, it looks like it's only ever gave them a positive return, right? But why I brought up this chart is because the moves and strength of the market, well, really the strength of the market has led to clean moves. And clean moves are usually showed with momentum. So I want you guys to think of momentum as strong, clear pushes in the market. We know by now that market structure moves like this. You have a higher high, higher low, higher high, higher low, higher high. Okay. And in these periods here, right, on the up moves, we are going to label this momentum moves because in an uptrend, these areas are typically the areas where you see strong buying, and I'll make these green to signify strong buying. These are the areas where in a bullish market, most money is made, right? Because obviously, if you're buying the market because you're bullish, you want to capture a small fragment of the move when it's going up, right? Now, you'll see here the example of the right is shown on the left here, and I'll mark this out for you guys. The momentumous, I don't even know if that's a word, but I'm going to use it. Momentumous moves in the market come after those down moves, right? Now, if you put these side by side, you'll be able to, I mean, if you look at it long enough, you'll be able to tell how these are representing the same things. It's the same move, and you'll see the strength of the market allows these moves or candles to happen very clearly. There's not a lot of chop, there's not a lot of wicks. It's clear and decisive, and it's showing pure momentum. Whether it's right here, whether it's down here, whether it's up here, whether it's down here. And these other moves, if I kind of go over here, you'll see the same exact thing. Now, why this is important to understand is that unlike Newton's law, where everything that's in motion stays in motion. Yes, that does apply to, you know, longer term trends and what may not have it. But when it comes to the market, even things that are in motion that are showing clear momentum, like this move here, you'll see after a big move in the market, oftentimes you'll get little pauses shown by a mixture of maybe up candles and down candles like this one here, or maybe this one here where you just see this one down candle. We call these pauses, or you could label it as a stop of momentum. It doesn't really matter, but what's important to know is that buy side momentum has came to an end. These moves here, unless it's like an anomaly market where it's like you just find the perfect market, it's only going up, which is like almost impossible, but it does and can happen. I've seen markets like those. You will too, the longer you're on charts. But unless you have an anomaly, then oftentimes momentumous moves in the market. Yes, I use that word again. It is now a word on this channel. Momentumous moves will have pauses afterwards. Now, why is this? One, I mean, buying pressure, whether it's from the general public or, hedge funds and institutions, not only should it come to an end, otherwise it would be very easy to make money, but it almost has to come to an end because if it didn't, it would be so easy to make money, right? So what I'm going to do here for you guys is I'm going to open up Paint. Now, you guys see the kind of the on chart example of what momentum in the market actually looks like, okay? Now, why that's important, but actually, before I get into why that's important, I am going to use a little bit of a picture to also help explain this. Okay. So let's say we have a racetrack. Okay. Can I get rid of this? Okay. I'm going to try and make this as nice as possible for you guys. Let's say we have a racetrack. I'm going to draw a little smaller circle in between, right? And then these are obviously like the lanes. Okay. Or I guess the middle lines of say per se a row. Who cares? Now, let's say the whole length of this track, let's say if you ran track and field, let's say it's 1500 meters. Okay. 1500 meters. And I'm going to use this green line here to represent the start. And let's just say the start is also the finish once you make it all the way around. Now, for you to make it all the way around, let's say, so 1500 divided by, I guess you'd call it four sides. This was like a square, even though it's a circle. It would be, was that 4, 8, 12, 16, 350, 700, 700, 1150. Yeah, so it'd be 350 each side. So 350, let's say 350, 350. And then to finish the race, you run another 350 meters. Okay. These are all meters. And let's say these lines will signify when the 350 meters is up. So from the start to here, you run 350 meters. Then from here to here, then to here to there, then there to finish. You get the point, right? Now, if you are in a race and you're against whoever, 10 other people, and you're a professional track and field runner, and you know you can sprint this whole 1500 meters without taking a break, and you're just going to go as hard as you can from start to finish. Now, do you feel that the first 350 meters, the time you run that first 350 meters inside that race will be the same time or a lower time than the last 350 meters you do, or the time you get in the last 350 meters in the race? Really think about that. Are you going to start as fast as you can and then finish just as fast? And some people might say, yes, runners do that all the time. I'm not sure. I'm just, creating the analogy here. Okay. So if you have a runner and he runs the first leg of 350 meters and say, let's say 10 seconds. So this takes 10 seconds. And then every single time after, he loses a second on his 9 seconds for the second 350 meters. Let's say 8 seconds for the third, bad. And then 7 seconds for the fourth. So what happened here? Well, the runner couldn't sustain his full momentum or the speed he was at from the start to the finish. And as that runner made its way down the track, although he may have been going a little bit faster when he started, he ends up slowing down by the time he gets to that final leg. And he's actually running 3 seconds slower than he was when he first started the race. Now, let's say if it was me or you, the average person running this race. Well, you may get actual people pausing at these 350 segments, you could call them. Maybe someone has to stop here and rest for 2 seconds. And then they rest at the next one. Then they rest at the next one because they couldn't sustain themselves, is what I'm getting at. And I think you have probably gotten that point. So ignore my awful doodle. Okay. So when we go back to the market, the same thing is happening. The market can't sustain itself and it must take little breaks and pauses before the next piece of momentum tags on into the market. Okay. So when it gets to, places where it's time to buy or sell, the best times to buy in the market, let me ask you, would you rather bet on the guy's speed in the first leg of the race or the last leg of the race? If you were to say which leg is he going faster in? Well, it would probably be the first leg you'd most likely choose. Okay. So, what we can say is that the best moves happen when the market has time to rest and regain its full strength again. Okay. So, what that means is after a full momentum move like this or momentumous move like this, the market in this segment here takes a break. It takes a second. It retraces. It rests, right? And this could last for one candle like it did here, or it could last for multiple candles. Every rest is going to be different and show up different in the actual market. Now, since the market at these points has time to rest, we can almost imagine it as a runner who just got done sprinting, took a 10-second break, and is now ready to sprint off again onto that second leg, right? Because if this is the first leg, I'm gonna make this black just for color coordination purposes. That if that's the first leg, break. Runner goes through the second leg. Okay. Leg two, break. Okay. Runner goes through the third leg. The best time to buy is when that runner gets a break. When those couple down candles come in a bullish market that's creating bullish structure with these higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. That's when the opportunities are born. I don't want to bet on the runner that just ran a full race or a full lap to get the same time in his second lap, right? I don't want to bet on the market to go up this much and then just go up that much again right away. What's beautiful about the market is that these pauses will signal you as an opportunity to start looking at entry opportunities to get involved in the market, right? So now you know the reason on why you want to be a buyer in the bottom pit of these breaks, pauses, retracements, whatever you want to call them. It's because the market has now taken a break and is ready to make that next momentumous cycle. Okay. So now you know where you want to buy. And just so you guys see here, this red circle here is the same as it is here, right? It's the same as it is over here, the same as it is over here, over here, over here, over here, and over here. Okay? They are simply pauses to continue the move. They're catching the breath. They're catching extra air. The runner needs just, a few extra gasps of fresh air before he can go off to that next leg and push for a really great time or push to higher prices. Now, where do you not want to be a buyer in the market? Well, get rid of this here. Where do you not want to bet on the runner, right? Do you want to bet on the runner getting a faster time in this last 350 meters than he did in his first 350 meters? No, because then, almost like the runner, he's ran for too long or the market has increased by too much that it must come to rest. And then it must take off again, right? So that's a little analogy on kind of the best places or spots to buy in the market, and where you don't want to buy comes to betting on that runner when he's already ran that full race, or betting on that move when it's already made that full move, right? Let me ask you, would you rather buy inside here or up here, knowing that most times, unless it's an anomaly market like previously stated, you are going to get that retracement or some sort of rest? When you buy up here in these areas, showcased by the red circle, once again, when you buy up here, up here, up here, up here, you are betting on someone who is fatigued in the race. They can't go anymore. And when you enter there, they're ready for a pause. They're ready for a break. It can't go any longer. It needs to come to rest. It needs to regain its breath, its energy, its focus to be able to recreate something similar than the move or as the move that came prior, right? Because we want to get in on these nice up moves showcased by the green rectangles on the chart here. But when we bet on moments after the market is already ran, say 4, 5, 6 candles up in a row, or that runner has already made that full lap, that full 1,500-meter run to then go and do another lap, it's not going to turn out the same way, right? So what this actually looks like on a chart and how you need to actually kind of implement this is what I'm going to show now, right? So you guys are going to watch me go through a back testing session. And like I said, guys, this video is very chill, very laid back, no rush. I'm sure some things don't even make sense to you as you watch this right now, and that's okay. Um, if you guys have any questions, always, just put it down in the chat, and I'm gonna help you guys understand it to the best way possible. Even if you're confused because I use kind of a weird analogy in your eyes, or just a part of it didn't make sense, that's okay. Rewatch it, guys. There's no like you don't have to put a timeline on your learning. It's okay if you say or set goals for yourself, but it's not the end of the world. You want to create realistic goals to maybe better understand something. or you want to reach a certain point in your understanding. You want to, maybe get to 100 back tested trades before you even go live. It's not good to have, monetary goals, especially when you're learning how to trade, but it's good to have, progression goals because at the end of the day, learning the skill of trading is very fun and very great. And it almost never stops, which is like almost the best part about it. And to be honest, if I gave you or, whoever gave you everything you wanted right now, ask yourself, would you even really appreciate it? Have you really done the work? Have you really earned it? Have you really gone through, the understandings like point A to point Z multiple times over, backwards, forwards, going through it 3, 4, 5 times over and over again because there's a certain part of you that still doesn't understand something, even though like you should understand it based off all the work you've done prior. And at certain points, you do feel like you understand it, but you still get caught up in your thoughts because it always feels like something's just missing from your understanding. If you haven't experienced that, then there won't be much joy in getting what you actually want. Right. So kind of just sit with that for a moment. I'm gonna erase everything from this chart and we're just gonna implement what we just learned. Simple. There's no crazy things that I'm gonna show you that wasn't just in front of you now. I already actually have a chart pulled up in the top left here. We are going to back test using flex. I know, like full disclosure, I know flex hasn't been bullish for the past year or so. I'm not going to sit here and waste your guys' time and back test a chart that's been messy or not clean. I need to find a good chart, something that I know I would trade, and then show you guys on what it actually looks like to trade a good market. Otherwise, I would be here for 3, 4, 5 hours just trying to find the perfect chart, right? And that's not what I'm going to do. So we see here on the 2 month chart, this is a very zoomed out version. You had this big move that became overextended here. It goes through a big retracement, right? Big retracement, plays around, goes sideways, sort of starts breaking to the upside, and then fails back down, and then reclaims the MAs here, right? So at this point, all I'm thinking is that this new structure here could continue a bullish leg. That's all I'm thinking of, right? And I know that on this higher time frame, the 2 month, it already made this first initial push. So just to label this for you guys here, this was the first push that came on the 2 month chart. And then what happened, guys? So it made a push. It became overextended here, right? Whether it's one, two, three, four, 5 candles, 6 candles in a row up in that momentumous move. What happens next? We talk about this. It came to a pause and it moved sideways slash down. So that's good because what we know now is that after a sideways pause, down move, the market has came to a rest. But if we mix in maybe some advanced learning that you guys will get to, and I won't talk about it much here, it's came to a rest on rising moving averages, which is important. Don't need to know anything else more than that. But it's showing us that it's made this big initial move, it's pausing, and now we expect that next momentumous move to do something like that. That doesn't mean it's going to do something like that, but we know the safest times to buy are in areas where it shows potential in being able to create that next momentumous move after that pause. So, what we're going to do is we're going to go down to the weekly and we're going to look at the structure. We see here price is pretty choppy. I probably wouldn't trade something like this until it came out like up here more. Like price would have to be somewhere up here because what this looks like in front of me is just a bunch of choppiness, and some pauses will be like that. This is the inner price action of that higher time frame pause. And not all pauses are going to look clean. A good exercise is, finding moves like this that make a bullish structure point and zoom in on their pauses and figure out what that looks like on a lower time frame. Write that exercise down. It's going to help you. I promise. The more times you see these pauses and retracements is is just going to be, fast tracking your learning into what looks clean and what looks, I guess, unclean. It's something you wouldn't trade. Me, I've seen this enough times where I know that if I'm expecting this next momentumous move to come in like this, but the market's looking like this, I kind of expect the same to continue. That doesn't mean it will, but that's what I can expect because the understanding of the market comes from being able to understand multiple parts of it. It's never just, black and white, the market's making a clean move, and then I can, you know, trade it as I always would because although the moves in the markets are the same, they look different. And this is a specific move or pause or retracement on that 2 month time frame that looks pretty ugly on the weekly. So what I'm going to do here is I'm going to create a little line where if price cleanly gets above that line, I'll trade it. Simple. All right. So this is good. Price kind of came up, it failed, and then it's now making another nice move in that momentumous area that we expect it to. Okay. So let me ask you guys, if we knew this was extended right there, and we know this is a safe time to buy or, potentially to be a buyer, how do we know the transition from being safe to be a buyer to overextension and I don't want to be involved in the market anymore? Well, that's going to come down to pretty much repetition, seeing it for yourself. You could also have a rule where you say if the market makes 6 candles in a row, I consider it overextended. What I'm going to do for this video is I'm going to use that exact rule. I'm going to say if this market goes up 6 candles, I'm going to consider it overextended. Your rule could be something different, but this is going to be the rule I use for this video to be able to tell if it's safe to be a buyer or where we've entered a more red zone, we'll call it. And I may want to step away and wait for retracement. Okay. So that pause happens. We're on the weekly time frame. What's cool is that since the market is fractal, you'll see on the inside, I'm going to delete this just for viewing purposes. What you'll see on the inside is you also have smaller moves, right? So the weeklies now made a big push. It's made like 1, 2, 3, 4, 5, 6, 7, 8, 9 candles going up in a row. Sorry, guys, I'm like dying over here. It's made 9 candles going up in a row in this structure point here. So if my rule is I can only trade up until 6 candles, would this be a safe market to buy right now on the weekly time frame? No. On the 2 month, yes. 1, 2, 3. This structure point here that I'm going to draw. Always so hard to find this. I need to put that first. This has the ability to move up more just based off my testing. This this structure in this bigger move which I will highlight maybe as red. It needs a retracement, right? Because if I was just trading the red moves, well, where would be the safe moves to buy or the safe areas to buy? Right here. Then the dangerous moves, the moves that come after the momentum, after all the buyings come in and the market needs to pause. This would be the danger area, right? This is where you do not want to be involved because the market on this fractal, this structure is overextended. So, what I can expect to happen there in this area is that since I know this area here is, by my standard, considered dangerous, I need something to happen here, like a pause or retracement, the same way it happened on the 2 month time frame in this structure, like here, or maybe the 3 month time frame, or maybe the 4 month time frame, or the 5 month time frame. Right? The market's fractal. It's not that every single time frame is making different structures. You're just using the time frames to view the orders and how the structures are being presented. Right? So this looks different across nearby time frames, but I was using the 2 months, so I'll go back to the 2 month. The same way the weekly structure would look different on nearby time frames, right? You go to a 3 day, looks slightly different, but still kind of the same move. So we're going to play this market and we are going to wait for a pause. And I'm going to prove to you guys that people who are getting entered right in here are going to be taken out most likely, unless this is a runaway market where the next couple candles just take off. Then most likely, then we're going to get a retracement. So let's see here. There you go. There you go. I didn't see this move beforehand. I just knew based off what I was seeing that this, like I said, guys, this red structure was overextended and it needed to pause to make that next momentumous move, right? What we're doing, if you think about it, we're stacking momentum moves on top of each other and we're going down the fractals. So we can make sure that if we're entering or if we're inside a larger time frames momentum cycle, we also want to pair that up with a lower time frame momentum cycle and get involved there. Now, what you guys know is I'm going to delete all this. We got that retracement. So let me ask you guys, is this now an area we want to be a buyer? If my runner is starting the race right here with full, you know, full air in his lungs. He had a week to prepare for the race. He's all, he's got his nutrients in him. He's fed. He's ready to go. And that beginning of the race is the same as this point in the chart right here. Do you want to be a buyer? Yes. Yes, you do. Because when you're a buyer there, you can assume you're starting the race and you've entered in the best place possible right after that market break to consider that or to continue that next move. Now, when it comes to stacking those momentum zones, like I previously stated, well, look at here. This is exactly what we're doing because now you have this larger momentum move. And then on that lower time frame, you've also came to a pause and you're expecting that or that next momentum move. So what do you think, guys? Let me ask you, does this market have to take off and fulfill that next momentum move? No, it doesn't. But because we've paired it with a higher time frame, we can expect that that's what the market wants to do. And if it doesn't do that, then it's going to show its hand and show us what it wants to do so we can stay out, right? All we're doing in the market is stacking momentum on top of each other to catch a piece of what we expect to hopefully be a large move based off what we are currently seeing in the market, right? So let's see here, guys. Let's see if the buyers who got involved in this area will be rewarded. What do you see? It happened. It happened, guys. Right. So we made a rule that we wouldn't trade six candles in a row. One, two, three, four, five, six. So we waited for a pause and that next push came. So the buyers who got involved here got rewarded. Now, let me ask you guys, based off what we know about danger zones or places you don't want to be involved in after the momentum is killed, which would be here, 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 and here. For people who bought the market there, did they most likely take wins or did they take losses if they're getting involved in those areas, maybe based off a lower time frame entry? Chances are they probably lost. They took a break even if they got super, super lucky. Okay. Now, you see here the places that worked out the best are the places that came to a market rest, a pause. Now, what you see here is this one, the larger time frame momentumous cycle is playing out. I love that word, momentumous. That's a great word. Is playing out. You have a smaller fractal playing out moves, momentum, pause. Now you have the potential. Let me copy and paste this over here. I hope the fact I'm stacking these zones on top of each other doesn't confuse you. It shouldn't because they both represent the same thing on a different fractal. Now, this momentumous cycle has gone up one, two, three, four candles. So, what that means is that I can still trade action on the inside of this larger move if it meets my rules of not being extended by over six candles and it makes a pause. I can look for an area to get involved. So, this next play we expect to happen is simply that. Let's see if it does. Okay. Now, what's great is that the market is failing. So, these moves here, these momentum moves, they played out all it could before the market just gave up. It was weak. It had to go to rest for the same thing to happen again. But you have to go back to that higher fractal, right? So as things get invalidated, as momentum runs out on certain fractals, that's when you have to step up and reconfirm that there's still a higher time frame, say momentum move coming in or potentially coming in, so you can get re-involved on back on those lower time frames. So what does that look like? Well, on the 2 month, are we getting a pause? Yes. So this move here has came to an end. I was using blue before, so I'm going to go to blue. This move here has came to an end. So what we're getting here is a pause, right? Structure has broke on the inside. Bullish, 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 bearish. Right. You guys can clearly see that. I'll draw it out quick. Bullish, 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 bearish. Break structure. And that break of structure on that higher time frame is going to be a pause. Because on this higher time frame, the structure is still bullish. And what's great is that since we're sidelined because that lower time frame isn't aligned with our higher time frame right now, all we're doing is we're waiting for that pause to complete, and we have the potential for what we now call the next momentumous cycle. I'm trademarking that word, guys. The next momentum cycle. So, what we'll see here when we go down to this time frame, we want momentum moves to the upside to come in. So what I'm going to do is I want to keep this on the chart. So I'm going to see if I can fade it a bit. I guess I got to do it twice, no problem. And what you guys are going to see here, fade these ones a little bit too in the back. That's good. What we're going to see here is hopefully if the momentum continues on the 2 month time frame, we'll see that next move happen. We'll see that repeat, something like this. Go down to the weekly time frame, and I'm just going to play the price. I know I was actually planning to like trade this price action for you, but I think it's actually much more beneficial to kind of just go through it like this, and you guys can see the same thing over and over again. What these pauses look like on lower time frames when they happen on higher time frames, how these higher time frame pauses continue, and what those continuations will look like on that lower time frame, and how you can have certain rules like that 6 candle in a row rule that sometimes will go over and then fail, or sometimes won't make it to 6 candles and still fail, or sometimes it'll go right to 6 candles in the move and then fail. The market's random, going to do the same thing every time. We use rules to minimize the amount of price action we trade, and the little amount of price action we do trade, we expect it to be in a good environment so we can then take our piece out of the market. Okay, so let's just play price here and see what happens. Okay, so you'll see this big move happened here. Go up to the 2 month time frame. This big move happened here, right? It made 2 candles up, but you'll see here the size of price movement that these 2 candles made is pretty much the same as what these 4 candles made, right? So what we know is that since this happened in lesser candles, then the price probably moved a little bit quicker, right? So you'll see here, it just kind of goes straight up, fulfills that next momentum move on the 2 month time frame. It sets up the potential for another smaller time frame move on the weekly to kind of set up like this. Right? So on the weekly time frame, I'll draw the structure so you guys can see higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low, lower high, lower low, higher high, lower low, and then we want that higher high to come in, but it doesn't end up coming in, right? So the momentum cycle or the momentum moves on this time frame, the weekly time frame, came to an end after one burst or one sprint or one rally, you could say. You'll never know how much, momentum moves once it come into the market before failure. Sometimes it'll be 4, sometimes it'll be 1, right? But what this failure tells us here is the same thing it told us here, which on a 2 month, that structure is telling us we want to get involved here because the market is at pause. And when the market is at pause, it has the ability to make that next move before it becomes overextended, needs to get air and retrace, pause to make that same momentum move again. And it'll do it differently almost every time, but moves will look the same, kind of chart to chart, move to move, asset to asset. Sometimes it'll look pretty, sometimes it'll look ugly, sometimes it'll happen in 4 candles, sometimes it'll happen in 1 candle. Now, one question for you guys. So we know now here, let me group all this up. Let's call it group A. We know here that all these points were places where the market was not extended. This is good because now you can identify these areas as well on any time frame you choose. Doesn't matter that it's the 2 month. Let me go to a 1 hour. Do these places here not look like the exact same places I showed you on that 2 month time frame? It's pauses after moves. Weekly time frame, you just saw the same thing on the weekly. Let me put these back on. You saw those pauses happen and you saw those next moves come into play. Now, question. This move right here, when did it become overextended? Right? Let me take all this off. I'm going to draw on the structure. When did it become overextended? Now, mind you, my rule is that a cycle, move, whatever you want to call it, is extended and consider a danger zone where you don't want to trade on a lower time frame after 6 candles in a row based off, just the rule for this video. So when this move comes into the market, when does it become overextended? Meaning I don't want to enter after 6 candles. So 1 candle up, 2 candle up, 3 candle up, 4 candle up, 5 candle up, 6 candles up. Right here. On this candle, the market is screaming. It's made a huge move. Momentum has came in. It's potentially or is overextended and it wants to take a break. Whether that break comes in now or shortly is what we don't know, which is why we back off. Because what we do know here at these points is that the market wants to make that next move up. We anticipate that next move up just based off how momentum and pauses work together. Now, I don't want to anticipate this market going any higher when I've already seen the momentum play out. You're almost asking for momentum to come into the market like repeatedly. Momentum, 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 momentum. No. What we know now is that it's momentum, pause, momentum, pause, momentum, pause. Right? So when we look at this move or this specific momentum that came into the market, it becomes extended all the way up here. Now, the people who maybe made money in these areas here, up here, up here, up here, up here, if they do that enough times, chances are they're probably losing long term. They're taking a lot more losses than what they need, and they're missing out on a lot of percentages or RR gain of the move, right? Because let me ask you guys, if you're entering on a lower time frame inside of these points here, we'll just use those two for now. Do you have a higher chance of pulling more out of the move if you get an entry down here or if you get an entry up here that takes you out for a loss? In strong trending markets, the earlier you're able to enter, or as soon as you start to see signs of a move come in that has that potential to play out, a momentumous move, that's the area you want to get involved. Traders who are trading up here after those 6 candles up in a row, 5 candles up in a row, those are the traders, like I said, who are going to be taking a lot more losses than what they need and are going to be stuck wondering why this market came down after the market makers, hedge funds, composite operator just took this market up 35% from where it was a couple weeks ago. They're wondering why it didn't go to the moon, right? But now you're understanding that after the market makes a big move, after it makes those big moves that are 36%, 40%, you're aware what the market now must do and what it'll look like when it's ready for that pause and ready to take off again. Because if you guys have watched my past couple back testing videos, you know that on repeat, the market is doing this. And you trade inside these areas here. And inside those areas, well, you're going to see the same thing. You're going to see smaller fractals playing out a momentumous move. And the same thing's going to happen. You're going to enter in the up moves. And you just saw that example with the 2 month and the weekly relationship. You just saw it. I just showed you. This understanding or just this teaching itself is huge. It's so big because it tells you so much about the market and certain fractals. Because think about it. If the market makes a move like this on, say, the 2 month, we use the same example on the 2 month. I know for a fact that for this pause to happen, it's probably going to make at minimum 1 to maybe 3 candles, 5 candles, 6 candles down or sideways, whatever. So what this means is if this is the 2 month, the black is the 2 month time frame, and this pause is at minimum, this pause on the 2 month could take 1 candle, 2 candle, 3 candles. So that's 6 months of doing nothing, right? And I'm doing nothing because I know there's no momentum in the market. The higher you scale, the longer you're going to be waiting for certain moves to happen. And the less you're going to be able to trade on both sides of the market. Because if you're trading a higher fractal, it's going to remain in a trend for much longer compared to a lower time frame that's changing bullish to bearish, daily to weekly. So if I know this is going to take at minimum 6 months just until I get this next move up, so it would look something like this. This is perfect. Why is this perfect? Because I know that, one, traders are losing money trying to get involved in a market not ready for a move. Traders are forcing trades on the short side in a bullish market because they can't wait for buy side momentum to come back in. Three, I'm protecting my capital while others are risking their capital. These are three benefits you will get by just understanding three, not all of them, just like big three here. There's tons. I'd probably sit here and talk about them for like the next 20 minutes. But these are the three big ones. Traders are losing money trying to get involved in a market not ready for a move, which is kind of similar to number two. Traders are forcing trades on the short side in a bullish market, right? Because they can't wait for this buy side momentum to come back into play. And with them doing all this, they are risking capital, taking losses, unnecessary losses, while I am protecting my capital, right? So just to show you guys this move here would be, I know you guys know this by now, but it would be these retracement areas here. And you'll see if you count the candles from the top of every retracement, this one was 3 bars, about 3 bars. This one was about 2 bars, 3 bars kind of sideways. It went down on this bar, second candle, third candle. And then on this one, about 3 to 4 bars. So those candles on this time frame let me know that at minimum I'm waiting 1 to 3, 4, 5 weeks just for that next move to play out. But on the 2-month time frame, from the high, this sideways move took 8 bars. 8 bars times 2 months is a year and a half. So for people, they had to wait a year and a half before this next move even happened. Like, think about that. How many traders can sit on an asset and not do anything for like 1 week, let alone a year and a half? This is your advantage. This is the beginning of you not forcing trades and being patient. Because if you understand the good areas to get involved in the market, right? The good areas to get involved compared to the bad areas, right? The bad areas to get involved, then you already greatly improve your chances of taking more wins than losses, staying out of the markets that are shitty and pausing and not ready for that next momentum move. And three, you can now identify markets that are or aren't ready for their move, right? So, big teaching here, guys. I think everyone, especially if you're newer, can take a lot away from this video. Again, I'm going to go through it, and I probably won't end up cutting this into you know, two separate videos. I think it was raw, raw footage, unedited, just, straight from the heart. Teaching you guys not only a rule you can implement, just how you can identify it. Because the more you see these markets, let me go back to NVIDIA for a second. The more you see these moves, the more you'll get into, I guess, habit of just knowing when you wouldn't get involved for your personal standard. Like this move comes in pretty high, large move, comes down. Big move. Holy shoot. 1, 2, 3, 4, 5, 6, 7 candles. Pause. Big move. Okay. And then structure breaks. But that structure breaking is a higher time frame pause. And we will see that by navigating the time frames because we use time frames to view orders. Not every time frame is making a different structure. If I go to the 6 month, we're on the 6 month, and it's doing this, that doesn't mean the 5 month is doing this, right? The 5 month is probably very similar to the 6 month. Same thing, 5 month, 6 month, 5 month, 6 month. And just a little exercise I'll do with you guys before we shut it down here. And I'm going to hammer this into every single video because this is a big one. We use time frames to view orders. So 6 month, this is what the chart looks like. 5 months, 4 months, 3 months, 2 months. See, you'll see here, we start getting more information because the data is spread out across more candles and we're able to see the same period of time just spread out between more candles based off the time interval, right? Because these areas here, these up moves, down moves, up moves, down moves that go bullish, bearish, bullish, bearish. On that 6 month, it was just bullish, right? But as we start getting into data sets that hold more information based off the time interval we're in, then we're going to be able to see that on that 2 month time frame. Okay, now time frame starts showing me a little bit of bearishness that continue bullish. Okay, let me see the 1 month. Oh, now I get a lot more information. Like I see full on bearish action that takes part before more bullish price action comes in, right? So say you want to go down to like the 3 week time frame now. Okay, more information, 2 week time frame, right? So it's kind of like you're taking a microscope, right? So you have a microscope and a handle, and you're using it to view the orders. You're using it to zoom in, and you need to understand that not every time frame is doing something different. They're just showing the same thing in different ways, right? So this is the 2 week, this is the 3 week, this is the 1 month, this is the 2 month, this is the 3 month, this is the 4 month. Go into a chart and play around with this yourself. Now, guys, I think that's going to wrap up the video. I really hope you enjoyed this one. Comment below if you took something away. Share it with a friend who you know is trading. Maybe they'll get value as well. Always share knowledge with your friends. Consistent knowledge, though. And more importantly, leave a like, subscribe to the channel. And yeah, stay tuned for more. I hope you guys enjoy these longer videos. It's a necessity in trading that these videos are longer because, again, trading is not just black and white. I can't put out a 5-minute video and teach you guys anything. Trading is, built off concepts, and concepts take time to learn, and concepts take time to curate to your own playbook and create your own strategy. And that's what we're doing here for you guys. So like, subscribe, and I'll catch you guys in the next one. Peace.